Howdy, who all my stock market gamblers? Welcome today. I'm Tall Mike. So glad you're here. Well, it's Monday. We got the markets back open. What's going on today? Well, the Dow's down about 200, NASDAQ's up about 20. So over the weekend, they came to a deal. The government didn't close down. We got a deal, right? We only got a deal for 45 days. We got to go through this all again next month. They say they need more time. More time? What have they all been doing? Didn't they know this was coming already? Look it. I don't know. When you don't get the job done, you should get fired. I say we fire them all. That's just my take. They want to kick the can farther down the road. Look, we're running out of road, man. We're coming up to a cliff. You got to start being reliable. You got to start running the government. It's embarrassing as a citizen. I tell you, I get a little upset. Well, I thought we might get a short squeeze if they came to a deal. Well, they didn't really come to a deal. They just kicking the can down the road. So the market's kind of it's kind of just hanging out. Now, could we still get a short squeeze? Absolutely we can. But this market has a lot farther to come down. I think the market will come down to the 200-day on the S&P, and we'll probably get a bounce off of there. That's just my take. But we got a lot farther to fall. The fireworks are just getting started. Anyways, let's go over to the other end of the market and talk about real estate for a little bit. So, not a lot of news articles over the weekend. I mean, Dave Ramsey, he keeps coming out and saying that, the housing market is simply irresistible. He's just got to buy a house. He thinks this is a great time to buy. I think the housing market is simply unaffordable. That's my take. We're the exact opposites. He thinks irresistible. I think unaffordable. And I think it's a bad time to be buying. Look at rates are record high. Well, not record highs. Rates have doubled, tripled now almost, right? Prices are close to record highs, close to what Billy Bob sold at. This is like a terrible time to buy a house. And I love real estate. Real estate's been my life, right? I'm a real estate broker. And I think this is just a bad time to buy. Now, I do think that if you're patient, I think the opportunities will show up again. You see, right now, what we're going through is, it's just a strange time, right? The quality of life of many Americans are just being devastated. I mean, maybe you've noticed prices of things are going up. People can't afford to buy a car, let alone buy a house, right? Look at car loans. Okay, so this year we're going to repo 2 million cars, over 2 million. Just in 2023, there will be over 2 million repossessions. All right, so in Q2, the second quarter, right? Anyways, the delinquency rate on car loans, all car loans, if you have a car loan, the delinquency rate was, the Q1 was 6.9. Q2 was 7.3. We're headed up. Now, Moody's thinks we're going to reach 10%. Q3 is not out yet. We'll see what those numbers come in at, but Moody's thinks we're going to reach a 10% delinquency rate. Now, Moody's might also be downgrading the U.S. still. They can't come to a deal in the U.S., so that Moody's might be the last one to downgrade them. S&P downgrade them, Fitch downgrade them, and now Moody's will probably downgrade the U.S. I mean, that's embarrassing, right? It's embarrassing. I'm just upset with the government these days, but okay, back to the car stuff. So car loans, okay, they're being delinquent. It's going to hit about 10% delinquency rate. Now that's crazy, right? But car loans always lead house loans. People will let their car loan go before they let their house go. Not having something to drive, well, that's bad, but not having a place to live, they'll hold on to their house a little bit longer. So can you imagine when we hit 10% delinquencies in the houses? Oh my goodness, the inventory that's going to flood onto the market, it's going to be quite shocking. But what about these car loans now? All right, so these car loans, they're delinquent. All right, so the bank going through repos, right? They repossessed the car. Let's say the person went out and they bought a $70,000 car after taxes and everything. It became $80,000, and they got financing for probably most of it, right? So the bank's sitting there holding an $80,000 note on a car that's probably worth $40,000. There's a 50% difference there. What they're holding the note at versus what the car's worth. You see, so here's what's happening when they send the car to auction, they want to get their note value. They want to get 80,000. No one's going to buy that car for 80,000. It's worth 40,000, but they're not selling them. They're having special lots where all these cars are sitting on. Like 2 million repos this year. These lots are full. They bought new lots just to put these cars on. They don't want to sell them. Now, why don't they want to reduce the price? Well, if they reduce the price, they have to mark it off their books, called mark to market. On their books, it's an $80,000 loan, an $80,000 asset. When they sell it down here for $40,000, they have to take a $40,000 hit. Now, you do that on 1 million or 2 million cars, that becomes a very large number. You see, the banking system is in a lot of trouble right now. They got commercial real estate problems. They got these car loan problems. But one of their biggest problems is actually, well, it's your house loan. It's your mortgage, right? You're locked in at 2.8%. That's great. Great for you, but it's terrible for the bank. See, the banks right now, they're going out and trying to get money to come in because they've lost half the money that you've given them on deposits already. Their deposits are down about 40 or 50%. They've lost that money. That money's gone away. When the government raised the rates from 0% to 5.5%, they hold bonds, they hold commercial-backed paper, they hold mortgages, and these are all decreased in value, right? So they're in a lot of trouble right now. Now, I think what's going to happen, you see, because not only are the banks in trouble, but the people are in trouble. The people don't have money. Yes, they locked in at 2.8%, but everything's going up on them. Look at their expenses are going up. Their HOA fees are going up. Their property taxes are going up. Insurance is going up. Everything's going up. They're having trouble holding on to their house. So what's the problem? Well, can't they just go out and refinance it? They could, but they'd go from 2.8 to up here to 8%. They don't want to do that, right? They don't want to do that. So how do they get money? How do they get that equity out? Yes, they got a lot of equity. There's a lot of equity envy out there right now. A lot of people sitting on $200,000-$300,000 in equity, but they don't have money for food. They're broke. They can't buy stuff. They can't put gas in their car. They're poor, can't make the car payment. Cars are getting repoed, right? So what's going to happen? I'm not sure, but I think there's going to become forced selling. Now, if the banks were smart, what they would do is they would give people the option, right? They give people the option. You're locked in at 2.8%, but you're flat broke. You're house poor. You can barely hold on to the house, and you might lose the house. Here's what they should do. They should go, hey, look at you refi this at 7-8%. We'll give you $50,000. We'll hand you $50,000 in cash. The banks would actually come out ahead on that deal because they get that 2.8% loan off their books and move it up here to a market value loan, 7.5%, 8%. Okay, and the homeowner, he's going to lose the home anyways, right? He's already starting to sink underwater, but he'd get 50 grand, so he could do a little party before he loses the home, right? He could go out and celebrate a little bit, maybe make a couple of payments on the new mortgage so he can stay there a while. But a lot of people, they're going to lose their homes. Their homes are going to go underwater. The equity's going to get wiped out. Things are going to come down. A lot of people don't see it that way. You know, there's problems out there right now. Now, there's a wealth gap right now in the United States, a wealth gap. Okay, the wealth gap between the rich and the poor, it's never been bigger. Great Depression era was not bigger than we are right now. This is the biggest wealth gap. Now, we may be coming into a new Great Depression era, but right now we got this wealth gap. What happened? Well, the government kind of robbed us, didn't they? They robbed us through their tax policies, right? They're robbing us every day through inflation, right? The cost of living rising on everything. Is anybody else getting upset out there about the gas prices? Look, I'm tired of paying over $6 a gallon. That's ridiculous, but I do think it's going to be over $10 soon. Look, inflation is not done. Inflation is just starting to take off again. We had that first wave up 9%. We came down. They were bragging 3.8. We got inflation down, but now we're headed back up. Oil's going to be over $100 a barrel soon, probably $150 to $200 a barrel, which will put gas prices in the stratosphere, $10, $12 a gallon. That's going to wake a lot of people up really fast because they can't afford anything. But here's what also how the government robs us. The decline of real wages. Real wages now. Real wages, I'm going to talk a little bit about this, a real wage problem. But nominal wages are starting to come down. Who was it? Walmart. Walmart just came out and said they're reducing the starting pay for people. Nominal wages. But look at, all right, so I'm an older guy, right? And a lot of you young people, you don't remember the good times. I'm just kidding. But anyways, when I had my first job, right, I was making, let's say minimum wage. All right, I was making minimum wage. Anyways, so making minimum wage, I'd have to work somewhere between 10 and 20 hours to get 1 ounce of gold. Now, gold's real money. Now, today we work for currency, and even back then you worked for currency, but you could go buy a 1 ounce of gold if you work 10 or 20 hours. Okay, so that was really good, right? So right now, today, you have to work 140 hours to get a 1 ounce of real money, not currency. 1 ounce of real money, you'd have to work 140 hours at minimum wage to get that 1 ounce of gold. You see the difference? You see how life should be? I mean, right now, look, if it were back like when I was young, I mean, the minimum wage would be about $120 an hour. And that'd be right now, what's it at? 15? I don't even know. But you see, the thing is, real wages are they just fallen off a cliff. People, I mean, what's that song, Rich Man North of Richmond, Virginia? Okay, I mean, that guy's got it right. You work all day for bullshit pay. I mean, that's what this world has come to. Look, they're not paying you enough to go out and you want to do better, but the opportunities aren't there. You see, the jobs that they're creating, they're all these service jobs, minimum wage jobs. You can go work in a restaurant. You can go out tomorrow. Chipotle will hire you. You can start making the burritos. Work 140 of those hours. You can then get 1 ounce of gold. I mean, that's ridiculous. It's been a long time since I've worked for minimum wage, but when I did, you work 10 hours, you could get 1 ounce of gold. Do you see how it happened? It happened quick. It didn't happen overnight. It happened over the course of time. But here's what's scary. All right, so scary is going forward. We're not holding even at these levels. Going forward, they're going to continue to print money. They're going to continue to rob and steal from, us, from the workers, right? I mean, that's just the way that's going to happen. The government needs all the money they can get. They're flat broke. I mean, they're sending it away. Send some more over to Ukraine. I mean, they're going to get the stimulus programs going again, the welfare programs, the socialism programs. They're going to get all that going again. And who's that on the back of? It's on the back of the workers, right? So it's not going to change. So over the next 3 to 5 years, this is my prediction. A lot of people don't agree with this, but over the next 3 to 5 years, the purchasing power of our currency, of the dollar, will be cut in half in 3 to 5 years, just because of the amount of money we got to print. I mean, we got to bail everybody out. We got to bail the banks out. We got to bail the pension funds out. We got to bail the insurance companies out. Government needs bailing out, but I mean, they're running the Ponzi scheme. They're the ones that keep printing the money. So in the next 3 to 5 years, the value of our currency will be cut in half again. Now, how do you protect yourself? I say you got to buy some gold, a little bit, right? Got to buy some silver, a little bit, right? I mean, that protects you from this inflation. And right now, they're on sale, man. They're dropping like a rock right now. I'm loving that, I mean, go in there. I buy the miners. Miners are free falling. Oh, I like the miners here. Starting to like these things. Anyway, that's just what I'm doing. You got to do what you got to do. Now, if you're in Mr. Ramsey's court, you got to hurry up and buy a house up here at the price Billy Bob got out of, because this may be your last chance to buy at these record highs. And I know a lot of you want to jump in and do that. I mean, that's what Mr. Ramsey recommends. It's a great time to buy. He must be a realtor. I'm a realtor. I've been a realtor all my life almost. But it's not a great time to buy right now. There will become a great time to buy again, but I'd sit back. I'd just sit back and rent right now. Why not? I mean, heck, you can, most areas at 30% off. Some areas, my area is 50% off, more than 50% off now. I mean, it's crazy. Why would would you buy at these record prices? But yet, if you listen to Mr. Ramsey, you listen to Barbara Cochran, they'll tell you it's a great time to buy. Well, they got skin in the game. They're invested in that. That's their whole empire is built on real estate. They don't want to see that come crashing down. It's going to come crashing down if you don't hurry up and get out there and buy a house. Hurry up. You're running out of time. I hope you enjoyed this today. It's a Monday, everybody. I'm Tall Mike. If you did enjoy it, give me a thumbs up. Why not? Punch the subscribe button. There's a lot going on this week. I want to talk to you some more. Get out there now and have a great day. Bye-bye now.